Seeing the bond guys panic is like seeing your parents cry as a kid. You don't understand it, but you know it's bad. What does that mean? Let me explain. So you may already know that the stock market has recently taken a dive. But on top of that, 30-year Treasury bond yields have also experienced their biggest one-week increase since 1981, rising by 0.48%. And that has Wall Street worried.
Bond market is very tricky. I was watching it. Yeah, I saw last night where people were getting a little queasy.
See, Treasury bonds are a way for the US government to borrow money. And like with any loan, the government pays back the holder with interest. And a bond's yield is the return an investor expects to receive each year over its term to maturity. Bond prices and bond yields have an inverse relationship. So when prices fall, yields rise. Normally, when the economy is looking shaky, capital moves out from riskier assets like stocks into bonds because they're much more stable. The increased demand for bonds typically pushes prices up and yields down. And the economy is in shaky territory right now. Stocks are down, the dollar is down, consumer confidence is down, but surprisingly, demand for bonds is also down. This matters to everyone, from the federal government to you, the consumer. Higher yields means the government will pay more interest when issuing new debt or refinancing old debt. And with the federal debt currently at $36 trillion, this could lead to billions more in federal interest payments. For everyday people, this means higher interest rates for mortgages, credit cards, and car loans. So if you're thinking of buying a house or borrowing money, it could cost you more. So why is bond demand dropping and is therefore causing yields to spike? Analysts are looking at three causes: inflation, decreasing confidence in the US, and possibly China. First off, tariffs have spiked inflation expectations. As prices rise, the returns you get on your bonds aren't as valuable. So investors demand higher returns through higher yields to make up for that lost value. Also, some global investors are losing confidence in the stability of the US government and its ability to manage economic challenges. Since that makes buying bonds more risky, investors demand higher yields to compensate. And lastly, China holds over $700 billion in US bonds. While not confirmed, some analysts are speculating that China could be selling them as retaliation for the trade war. Trump wants lower yields, so China selling bonds and driving up yields would threaten Trump's political agenda. So make sure to keep an eye on these bond yields because they're going to tell you a lot about the near future of the American economy.